Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. Today we are going to cover a subscriber recommendation, Archer Daniels Midland ADM. It is July 27th. Let's jump right in the video. If you want to know more about this company, check them out at www.adm.com. That is their homepage where I pulled this information from. Little background history: in 1902, so this one's been around for well over 100 years, 120 years at this point, George A. Archer and John W. Daniels began a linseed crushing business. So that's where they began. You can see back here, right, old school picture of them. Looks like a box car, railroad car here. What we do, we don't own farms, but we work with growers, supporting them with personalized services and innovative technologies. We partner with them to develop and enhance sustainable practices and transform their bounty into products for consumers around the globe. We take natural products and turn them into staple foods, sustainable, renewable, industrial products, and expansive pantry of food and beverage ingredients and solutions. From plant-based proteins to probiotics, we're growing nutrition trends and working closely with our customers to create custom, delicious solutions from nature to meet customer preferences. We do the same with the animal nutrition products. Today, more people want to feed their pets the same kind of clean, healthy products they eat themselves, and they expect a commitment to the humane and sustainable treatment of livestock and poultry. Our innovation and expertise are helping people live healthier lives around the world. Our experts, including food scientists, flavorists, and chefs, offer innovative solutions for consumers seeking food, beverages, and supplements to support health and wellness. Our global footprint combines with local insights to give us capabilities few other companies have, ensuring that we get the very best ingredients from around the globe to our customers wherever they may meet. So they're helping farmers transform their grown products into other products, right, that we eat and drink, and not only for us but for our pets. I know I have 3 dogs. Let me know down in the comment section down below if you have any animals. We were only planning on getting 1 dog, actually, fun fact, but then my 2 daughters needed a dog of their own apparently, so we ended up with 3. But that's just the way life goes. So if you have kids down below, let me know in the comment section. You'll know what I'm talking about. But again, if you want to know more about this company, www.adm, that is their homepage. Let's get into the fun stuff. Down 1.29% on the day. We are talking about Archer Daniels Midland Company, ticker ADM. I believe this is out of the consumer staple sector. It's either consumer staple or consumer discretionary, but I believe it's consumer staples. Anytime you're dealing with food, that typically is. They closed the day out $85.78. Again, down 1.29%. 52-week range as low as $69.92, as high as $98.28. Kudos to you if you are buying it down here at these 52-week lows. You've seen a nice return over the last year. Average volume 2.8 million. Today's was 2 million. Big sell-off in the morning. Looks like it rebounded midday, but then about 1 o'clock, you just saw it basically steady drop for the rest of the day. Market cap 46.719 billion. Beta is not here, so you'd have to look that up elsewhere, and that's why I recommend more than one source. I believe last time we looked this up back in April, I believe it was, they were a relatively volatile company, maybe 0.8, 0.6, somewhere in there. But again, look it up. Don't take my word for it. PE ratio, price to earnings, is $11.44 per share. That's pretty low there. Earnings per share, EPS 7.50, though you'd want to compare their price to earnings ratio to like companies, right? Just because a PE ratio is low doesn't necessarily mean that it is showing value. Some companies in some sectors just have low PE ratio. Shipping, for example, has a historically low PE ratio down below 5. So just because you see a low PE ratio doesn't necessarily mean there's value there. Earnings per share, EPS, very high, $7.50 here. That's a very nice earnings per share. Earnings date, October 23rd through the 27th, somewhere in there. For dividend, $1.80. They are a quarterly payer. We will see that here in a little bit on a few more slides. Yield is 2.09%. Nice, I'd say decent yield. It does beat the market, but if you were to get it closer to this 52-week low, obviously that would be a higher yield. Ex-dividend date was May 16th. Looks like dividend date September 8th. So is that when they're paying out? Well, that's a huge gap between when I'd look this up. I'm not sure that that's accurate. Usually there's not that big of a gap between the ex-dividend date and the payout date. And a 1-year target of $97.71, at least according to Yahoo Finance. So it does speak to some potential upside appreciation, at least according to Yahoo Finance here. Now, I like to look at dividend yield theory to see if there's potential undervaluation here. So we jump over under statistics. We go over to their 5-year average, 2.66. We compare it to their current 2.09 or forward, same number, 2.09. And this one, according to dividend yield theory, is overvalued. This number being lower means overvalued. They're inversely correlated. If this number was under 2.66, it would speak to, or I'm sorry, if this number was over 2.66, it would speak to some undervaluation. So currently, according to dividend yield theory, this one is a bit overvalued. It does have a low payout ratio, 22.67%. Now you jump into financials, or I like to jump into financials, and there's a lot of information here. You can check out their revenue, balance sheet, income statement, debt levels, assets to liabilities ratios, all that information. Whether they're buying out back shares, we'll see that they are buying back shares here. You can see that. Their free cash flow is what we're looking at. We want growing free cash flow over time because dividends are paid out of the free cash flow, and we want growing dividends over time. So 2019 negative 6.2 billion. 2020 negative 3.2 billion. So they improved from 2019 to 2020, but still in the negative. Big improvement from 2020 to 21, 5.4 billion here. So big jump up here, but then another big drop in 2022 from 2021 to 2.1 billion. So they are up and down all over the place on free cash flow. You might want to do a little bit more digging on this to see why. What is going on here? Are they repaying significant amount of debt? Are they buying back shares? It looks like they're buying back shares a significant amount here in 2022. So is that possibly part of the reason that their free cash flow levels drop significantly? If so, that would not be as concerning if they're repurchasing stock. But these numbers back here where they're not as high on the repurchases in the negative, that's a bit concerning. So I'm not sure what's going on there. Did they sell off a portion of the business or something, or pay down an exorbitant amount of debt, buy and reinvest back in the business? Not sure. You'd have to look that up. But in the negative, never good, and big drops from one year to the next is never good. You'd want to watch 2023. If they continue to decline from 2021, might be a trend here. Now, I always recommend more than one source. So another one that I like is stockanalysis.com, and the 12 stock analysts they've had take a look at this. They call it a consensus buy. I'll be honest, I do not agree with this. I would love them to pull back closer to that 52-week low, back down into the 70s, if not the $60. I know their 52-week low was 69, but maybe mid 70s would be a better spot for this one. 85.80 is just a little overpriced for my taste, and dividend yield theory would agree with me, but that's just my opinion. Just because I say something doesn't necessarily make it so. But they have a low estimate of $83, which would be a 3.26% decrease in the stock price. They have an average estimate of $98.33. This would be pretty close to what we saw with Yahoo Finance on the previous page. That would be a 14.6% increase in the stock price. And if it happened to hit their high of $117, that would be a 36.36% increase. All the while, you could collect that 2% dividend yield while you're waiting for this to run up to 117. If it ever makes it there, right? And I'm sure it will sometime in the future, but who knows when that'll be. Now, this stock analysis gives you the same type of information. Financials, statistics is what we're going to look at for return on invested capital and return on equity. I like 10% or better for both of these. Return on equity, 16.9%. It beats the 10% I look for. And return on invested capital at 14.3% beats the 10% I look for as well. So good numbers here on return on invested capital. They are reinvesting into themselves well and handling the money that they do and reinvest pretty well, which again makes me question why they had two big drops in negative free cash flow. If they are reinvesting and doing well doing so, there must be something that happened in those 2 years. But again, you'd have to do some more research on that one. Let's jump over and look at the dividend. Again, low payout ratio, 24.03. I think it said 22 in Yahoo Finance, but close enough, in the 20s. 10% dividend growth, 10.39% to be more specific. Dividend growth, very nice dividend growth on this one. Double digits, we like to see that. 2020 of May 19th, they were 36 cents. Looks like in February they jumped. In 2021 they jumped it up to 37 cents. Probably, yep, February again in 2022, 40 cents. February 2023, 45 cents. So I would look for next year around February to see if they just jumped it up in February. I doubt they're going to do it again this year, but next February would be the next jump up I would see. And again, very nice dividend growth on this one, 10.39%, very low payout ratio, 24.03. If you could get this at the right price, this one would be one I would be interested in. But right now, I feel it's a little overvalued. Again, dividend growth or dividend yield theory agrees with me on that one. So maybe one to add to the watch list if you're investing in it now. Let me know down in the comment section below. This is the vested interest stock screener. This is how I set up the videos. This is also how I look at companies to see if I want to invest in them. Obviously, there's more to it, but this is a high level to see if I'm even interested. It gives me a quick breakdown. Do I want a deeper dive? Do I want to get into the revenue? Do I want to get into their debt? All that. If it meets 4 of the 7, or if it's a financial company meets 5 of the 8, then I go a little deeper, start looking at growing revenue over time, asset to liability ratios, their debt levels, that sort of thing. But high level stock screener here is what I use and how I set up the videos. That is it for this one. Archer Daniels Midland, what do you think of the company? As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on Vested Interest. Join the Vested Interest community, building a community of like-minded dividend growth investors so that we can share our experiences. Stocks we're watching like this one. Again, thank you for the suggestion. And if you have a suggestion, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. Again, really appreciate it. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.